Well, welcome to Shadow of Truth. And this is part two of a great conversation that we had with Dr. Paul Craig Roberts. And this is going to be a completely different segment, all new topics, all economics and finance. And without any further ado, Dr. Paul Craig Roberts. And thank you very much for sticking around.
You know, if you really look at it, Washington represents the most concentrated form of evil in human history.
Couldn't agree more.
Dr. Roberts, just before before we let you go, we want to just discuss the Federal Reserve FOMC meeting and what's going on that's connected with that. But we were having a conversation the other day, and you had made the comment that the entire political system in this country is ready for war. And you said U.S. policy is insane and the people running the policy are insane. I mean, do you really think there's something that's going to stop that train wreck?
Well, like I said, Dave, I think the only thing that can really stop it is Europe. All the cost is coming on them, and they've just got to see that this cost is enormous and there's no benefit. There's no benefit from being American vassals. It's only costs and dangers. And if that penetrates their thick, greedy skulls, and they say no more, then we've lost the cover, and I think that stops it. I really do. I think the shock, you know, if Germany was to one day say, we can't, you put too many costs on us, we can't take this any longer. I think just the shock of that would cause a big political change also in the United States, and the neocons could quickly be removed. They would say, well, look what you've done. You've cost us the empire. Look at you neocons. The empire is eroded and falling apart, and it's all because of you. And so, you know, Washington is like a hen house. You know, they'll peck each other to death if they can. There's so much jealousy and competitiveness and rivalry, and nobody likes anybody. Nobody likes each other. And so, yeah, it could all stop abruptly, but it would take something like that happening. You know, we've talked about it before, Dave. There was some hope that Greece, faced with unpayable debts, would realize it and simply not pay and be kicked out, and that would begin the unraveling, because it would be followed by Italy and Spain, because they're in the same fix. And so Southern Europe would be removed dato, and that would essentially destroy it. So there's always these possibilities, and as we suspect, we're facing a economy that's turning down, not just here, but in Europe. It may be worldwide, you know, it may be China too, but certainly here in Europe. And Europeans already have high unemployment. We have high unemployment if you count it.
Right.
And so you can have political systems just overwhelmed with problems. Look, what happens to Europe if they go now into a serious recession while they've got millions of refugees pouring in? You know, there's no jobs, there's no revenues. I mean, what do they do? I mean, they're also going to be forced with Greek refugees because they can't live in Greece. They're being driven into the ground. If they then turn on Italy and Spain and Portugal, all those people will be trying to go to Germany and England. So I think the situation has promises in all of the troubles that have been caused and brewed. And those troubles are loose. What do they think they're going to do with the refugees? And they can't keep them out. And they're going to send them back to Syria. So we can't even send the Mexicans back to Mexico. So I don't think anything like that is going to happen. They're going to be overrun. And if we continue this death and destruction that we've brought to the world for 14 years, there'll be more refugees. And the resources for governments with high unemployment, particularly among the youth, it's not the old people so much that are out of work. It's the youth who've got energy and anger, will take risks. So I don't know. I think that it could collapse on the United States. And if that happened, it would be a good thing. And there would be two new leaders in the world. It would be Russia and China. They would be the leaders. The West would be irrelevant from that point on.
I guess my whole problem with hoping for that outcome is that, if you trace the historical precedents all the way back to Rome, and admittedly, before Rome, I get a little bit sketchy. But really, the way that history is operated when there's an empire that's collapsing, which the U.S. is collapsing, when all else fails, start a world war. And if a world war doesn't break out this time while the U.S. is collapsing and the power mongers refuse to give up the power that they've enjoyed for 40 years, then I think that's where this is headed. I mean, it would be unprecedented in history for this not to end up in a world war.
Well, Dave, something like that could happen, but generally what happened to Rome was it didn't have the power or resources for war, and that's why it collapsed. It couldn't fight.
But it extended itself too far over the world
that's
trying
right.
to maintain its empire, and that's kind of what the U.S. has done. I mean, we're
So
everywhere all over the globe.
It couldn't fight. Inferior forces in terms of strategy and abilities to keep armies in the field and all that overwhelmed the Western Empire, and so I think that we could have a situation where the United States is in so much trouble, domestic, so much shock over the loss of allies and so on, that it just couldn't possibly go to war. It couldn't. It wouldn't have the resources. It wouldn't have the energy. It wouldn't have the confidence. When something like that happens, people lose confidence, and so. And I don't think the Mexicans would take over and go to war. They're not interested in that. So, the Germans had already basically overwhelmed Rome before it collapsed, and the legions were no longer Roman; they were Germanic. And
I'm not saying it's going to play out exactly like it did then, but it's old wine, and we're looking at old wine in a new bottle. But anyway, we'll see how this plays out. I think we launch nukes before we collapse to the point where we're unable to do anything. But I wanted to circle back to the FOMC meeting last week, and once again, the Fed deferred on raising interest rates, even just a measly 25 basis points, despite all the threats in between the meeting last week and the meeting before that, with all the Fed officials coming out and saying, oh, we have to raise rates in September. And it turned out over 80% of all Wall Street economists thought the Fed was going to raise rates. So what do you make of the fact that the Fed deferred once again on keeping rates at zero?
Well, Dave, I think you and I agree that the talk about raising rates is just part of trying to protect the dollar.
Yes.
And so as long as somebody expects, well, one day they'll raise the rates so we can keep holding these dollars that they've overproduced. But I think, as you and I probably also agree, they can't raise the rates because of the possible impact on all the interest rate derivatives, because of possible impact on stocks and bonds. And even a small rate rise could cause all kinds of problems with the trillions and trillions and trillions of interest rate derivatives. I don't know anything about those. I don't think the banks that hold them know much about them. And but they're probably trading on a few basis points. So 25 blips could be a big amount. It could really cause trouble. So I don't really know, but I don't think the Fed thinks that it can raise interest rates without having a whole new set of problems that it probably doesn't know the extent of. And if all those derivatives start blowing up, it'd have to print trillions and trillions and trillions more dollars to buy up or to keep the prices of those assets high and to save the banks. And all those trillions of dollars would certainly sink it. I mean, they wouldn't be able to talk the dollar up anymore. So I think they're just trying to avoid all that. I don't think they know what to do. They don't, except to try to keep it going.
Do you think that the rest of the world, and in particular the creditor nations, saw what Janet Yellen did in not raising rates? Do you think that the Federal Reserve is now fully exposed in front of our creditors as nothing more than a Ponzi scheme? They already knew it was a Ponzi scheme, but that was really just confirmation that
I think, Rory, that they're probably happy that the stock market is not threatened and the bond market's not threatened by Fed action. So they're probably happy. You know, as far as I can tell, just relatively few players determine the market. You know, the great big pension funds, the great big hedge funds, the participation of the public, I think, in stocks is way down. And so it's money managers, and they're judged by comparison to peers. So they all do the same thing. And so I don't know that. I think the Fed's decision was probably welcomed, because everybody says, well, now we don't have to sell to see what happens before we commit ourselves to more stocks and so on. But I don't know. I really don't know.
To kind of open the door for China to sell some more of their treasuries, do you think? Or does that play a part in it at all?
I don't know.
Okay.
I don't know what China's doing. And
well, the big fear of the markets for as long as the Treasury bond, the amount of treasuries outstanding has become problematic. I mean, China soaked up a lot of them, and the OPEC countries soaked up a lot of them, and both of those entities are now either they've stopped buying or they're outright cutting back the way China is. And I think it has an ongoing program to unload its treasuries. I think everyone was worried China was going to come out one day and say, okay, we've got 1.2 trillion for sale. Who wants them? But I mean, a smart trader obviously wouldn't do that, but they've been shedding them. It looks like at about a rate of somewhere between 80 and 100 billion a month now for a few months. And so the question is, where are those bonds going? And I think a lot of them are there's demand for treasury collateral in the market to put up for derivatives, because the derivatives amount outstanding mushrooms higher and higher every day. And then the other piece of this puzzle that doesn't get talked about, but a big part of the Japanese re-upping its QE program was that they're printing yen, and with those yen, the Bank of Japan is buying Japanese JGBs, the government bonds, from the pensions and putting them on the Bank of Japan balance sheet, and then the pensions are turning around and buying U.S. treasuries. So the Japanese pension system is now being used as a just sort of a dumping ground for the U.S. treasuries that China's selling.
Yeah, I'm sure that, I mean, it's a vassal state, and we control them, and that's probably a policy that was worked out in Washington. And they've just given their orders. I'm not sure the same thing's not happening with the European Central Bank.
I'm not sure if there's any room left in the EU banks for more treasuries like that. I mean, they are heavy buyers in our auctions, but in terms of the amount of treasuries that that China's unloading, I think most of those are either used in the market as collateral to post against derivatives, which especially things like energy derivatives, they've got to be melting down. EM foreign exchange derivatives, they have to be melting down. And you hit the nail on the head when you said you thought that they didn't raise interest rates because they trigger a massive daisy chain collapse in the interest rate derivatives market, because that's by far the largest segment of the derivatives market. And I don't think they'd be able to print money fast enough to keep that from completely creating financial nuclear destruction, to use the term that actually Warren Buffett used back in, I think it was 2006.
Well, it's so big, it could certainly get away from them.
I mean, I guess I'm thinking I think we are at a tipping point in the financial markets, and as you and I have always agreed, the Fed has the market completely rigged right now. But I also think we're starting to see signs that they're losing control of it. And yeah, they can print money and do their mechanisms to keep the S&P from falling too far too fast, or they can just unplug the New York Stock Exchange, which they've done a couple times this year already. The boogeyman out there is this shadow banking system, and I don't think the Fed can control that. And part of the shadow banking system, it has financed these interest rate derivatives.
It's a new thing. We don't have any experience to go on because we've never had this type of exposure to risk that no one can quantify. So how it plays out, we have no real way of knowing. We can't go by the past because it wasn't there in the past. When I was in the Treasury, none of these derivatives existed. In fact, they called derivatives Treasury bond futures for derivatives. So something that simple and straightforward was a derivative in those days. But today, people don't really know what they are. I don't even know what they are.
I want to ask you one quick question, Dr. Roberts, and then we're going to let you get on with your afternoon. And it's a simple yes or no. With everything that you guys have just described, and you hit, and the way that what you just said was, there's nothing in history ever, the times that we're living in are completely unprecedented. How can we look at any historical data regarding the markets, regarding anything really, and it have any meaning whatsoever?
I don't think you can. All those charts and things people go by, some people go by, that's from a different time. If there ever were any good, that's from a different time. And the things now are just so new and different, and no experience. We've got nothing to go on, and so
nothing to compare it to.
Nothing to compare it to.
Well, that's been my feeling for a while now, and thank you for confirming that. And we certainly appreciate all your time. It's been great as always. And Dave, is there anything you'd like to throw in?
No, just thank you for your time, Dr. Roberts. This has been a phenomenal conversation. We really appreciate it.
Well, I enjoyed talking to the two of you. It's fun.
Well, we certainly appreciate it, and we'll do it again soon.
Try to find people you can have an intelligent conversation with about any of this. They're all inside the matrix, including all those idiot economists who thought the Fed was going to raise interest rates. I mean, how can you be an economist and think that?
You can have an intelligent...
Did you think they were going to raise interest rates, Dave?
Me, no. I wrote an article a week ahead of time saying, here's why they're not raising interest rates. I guarantee it.
Right. So we've got economists who are so tied up in the matrix they can't think, and they thought the Fed was going to raise interest rates. I mean, everything that they're living in a non-real world. It's created by propaganda and hopes and old theories. You know, neoliberal economics is, you know what Michael Hudson calls neoliberal economics? Junk economics.
Well, hold on here. Let's not totally, degrade these people. I'm sure with some of them we could have a very intelligent conversation about the New England Patriot Deflategate.
Okay, you're right. All right, you guys. Talk to you later.
That's the most critical issue facing this country right now, right?